What if you could peek inside the portfolios of some of the greatest investors alive and see exactly what they bought, what they sold, and where they are placing billion-dollar bets right now? Today, we are breaking down the latest quarter four 2025 portfolio moves from four of the most influential investors in the world. First one is Bill Ackman of Perishing Scare Capital Management. Then we have Warren Buffett of Berkshire Hathaway. Then we have Bill and Melinda Gates Foundation Trust. And at last but not the least, Chris Hone of TCI Fund Management. We'll cover their portfolio sizes, biggest holdings, and the massive stock moves they just made. Because when billionaires reposition their money, market pay attention. So let's start with one of the boldest investor in the game. The first one in the list is Bill Ackman, and he's known for high conviction bets. He does not dabble, he just goes big. And his quarter 4 2025 portfolio proved that once again. His perishing scare portfolio is worth about $15.5 billion, spreading across just 11 stocks, incredibly concentrated. That alone tells you something important. Ackman only invests when he has extreme confidence. His biggest holdings right now include Brookfield Corporation, Uber, Amazon, Google, Meta. But the real story is what he did this quarter. If we see on his activity, he has just increased Amazon by nearly 65%, adding about 3.8 million shares. That's not a tweak, that's a statement. He also bought heavily into Meta, adding roughly 2.6 million shares. Another major big tech vote of confidence. This signals something important. Ackman is leaning hard into dominant tech platforms. Now, if we look at his reductions, he has trimmed several positions slightly, like in Brookfield, Uber, restaurant brands, but those are minor adjustments. The real shocker, he dramatically reduced Alphabet, specifically one share class, cutting exposure aggressively. And then came the headline move. Ackman completely sold out of Chipotle Mexican Grill, 100% exit. When an investor like Bill Ackman leaves a long time winner entirely, it usually means one of three things. First, he believes valuation is stretched. Second, he sees better opportunities elsewhere. Third, his investment thesis changed. Either way, that's a decisive move. Bottom line, Ackman is rotating capital out of consumer growth winners and doubling down on mega cap tech dominance. Now, second one in the list is the legendary Warren Buffett. If we look at his Berkshire portfolio, it is enormous. About $274 billion portfolio, holding 42 stocks. Unlike Bill Ackman, Buffett runs a diversified empire, but his top positions still dominate. The larger holdings are Apple, American Express, Bank of America, Coca-Cola, Chevron, Moody's. Uh, these are classic Buffett holdings, strong brands, predictable cash flow, durable advantages. But what did he do this quarter? Now, if we move on to the activity section and go down, we can see that he has increased positions in Domino's Pizza, insurance giant Chubb, then energy powerhouse Chevron, a small new position in New York Times Company. Buffett continues to like resilient consumer businesses and energy. If you look at his reduction, he has trimmed Apple slightly, Bank of America more meaningfully, and some smaller positions across the portfolio. And here's a big one. He significantly reduced Amazon exposure during the quarter, cutting a large percentage of shares. Interesting contrast with Ackman, who went aggressively bullish. And that is what makes market fascinating. Smart investors can see the same company and reach completely different conclusions. Buffett's strategy right now appears to be protecting gains in mega cap tech, then maintaining a dominance in consumer brands and increasing exposure to energy and insurance. Classic Buffett, steady, patient, and disciplined. Next in the list is Bill and Melinda Gates Foundation Trust. The Gates Foundation portfolio is worth about $35 billion, holding 23 stocks, and it looks very different from Buffett or Bill Ackman. This portfolio leans heavily towards industrial strength and infrastructure. If we look at their largest positions, it is Berkshire Hathaway, Waste Management, Canadian National Railway Company, then they have Microsoft, Caterpillar, Then we have Ecolab, Walmart, FedEx, and Coca Cola. This is basically a portfolio built around global infrastructure and real world economic activity. Now, if you look at their quarter 4 activity and go to the activity tab, the foundation has mostly trained positions rather than adding. So they have reduced Berkshire Hathaway, Microsoft, multiple industrial and consumer holdings. This looks like portfolio rebalancing, locking in gains rather than making aggressive directional bets. So the Gates portfolio is about stability, global development, and durable economic engines. Next in the list is we have Chris Horn from TCI Fund Management. He runs a concentrated portfolio of around $53.6 billion with just 9 stocks in his portfolio. That is extreme focus. Now, his largest stocks holdings are GE Aerospace, which is the biggest position. Then he has Visa Card. Then he has Microsoft, Moody's Corporation, S&P Global, Canadian Pacific, Kansas City. Then he has Google, and then he has Ferrovial SE. Horn focuses heavily on global infrastructure, financial data monopolies, and essential networks. If we go on to the activity sections to see his activities for the quarter 4, we can see that he has increased Ferrovial, S&P Global, and Microsoft holdings, but sharply reduced Visa, Canadian Pacific Kansas City holdings, and Canadian National Railway Company's holding as well. Looks like he's rotating between infrastructure and financial information giants. High conviction, strategic reallocation. Now, here is what stands out across all these 4 big investors. Big tech is still central, but opinions differ. Ackman buying Amazon, Buffett trimming, fascinating divergence. Then we have infrastructure and real world assets remain dominant. Railways, industrials, logistics, energies everywhere. Concentration is common among elite investors. Ackman has 11 stocks, Chris Horn has 9 stocks. Conviction beats diversification at this level. And the next point is massive capital rotation is happening. Tech, energy, infrastructure, financial data all being rebalanced. If you enjoyed this deep dive into billionaire portfolios, hit like, subscribe, and tell me in the comments which investor do you trust most right now. Ackman, Buffett, Gates, or Chris Horn. Because one thing is certain, when billionaires move billions, the smart investors pays attention. See you in the next video. Tada, bye bye.